Hey everybody, Gavin Shnieder here with Abode-based Real Estate, and today we are joined by a guest, Mr. Devin Quinn from Evergreen Home Loans. Welcome to the show, my friend.
Thanks, Gavin. Thanks for having me, sir.
So guys, today we're going to be talking about Rehab loans, which is an excellent product. Devin, why don't we jump right in and you can kind of explain what a Rehab loan is.
So pretty basic. Everyone's watched HGTV, I'm sure, recently, and there's always, like, every show is based around rehab, right?
Sure.
So it's actually pretty popular right now. Right now, limited inventory is causing a bit of a problem in today's market. There's a lot of homes out there that have financing issues in regards to the roof or the plumbing or the electrical, and we have sellers that just don't have the money to fix those before closing. Those properties can't be sold with a normal client. They're usually going to cash or investors that have that money to take care of those issues. A rehab loan, Gavin, is going to address that. So if we got a failed roof, we can buy that house, we can finance the cost of that roof in that loan, get the loan closed, fix the roof post-closing, and now our clients have the ability to walk into a home that someone else couldn't.
Outstanding. So from a qualification standpoint, is it a whole lot different than a normal loan product?
No, pre-approval process is identical to what most clients have already done. You know, so if you're already pre-approved for an FHA loan or you're already pre-approved for a conventional loan, you likely are going to qualify for one of these two programs. Now, there's two of them. So we've got a FHA 203K rehab product. We've got a conventional rehab product. So both of those are going to be available to clients. Just keep in mind, if we're doing a conventional product, you do have to have a minimum of 5% down on those rehabs.
Okay. So, you know, if a client is approved for, say, $300,000, does that mean we can look at homes that cost $300,000 and we can do repairs on top of that? Or do we need to be looking at homes that cost, say, $200,000 or $250,000?
Yeah, that's a great question. At the end of the day, you got to remember from a client standpoint that you have to be approved for the total project. What I mean by that, Gavin, is whatever we're going to buy the house for and however much the total cost of repairs are, your client has to be able to be approved for that dollar amount. So if we buy a $300,000 house, we got 20 grand worth of upgrades, we got to make sure that we're qualified for 320. Done deal. Get it done.
Excellent. So in terms of the kind of work that can be completed, are we talking about small projects, big projects, or are there things that have to be done?
Sure. Yeah, a lot of times, most of these products are going to be used to address concerns on a house, right? You know, things that just can't get financing on. So you're talking about your roof, you're talking about maybe things that need to be addressed to get the loan closed. So you're usually going to start there. That's usually the primary use of the loans.
Okay. So what about wish list kind of items, whether it's, you know, new countertops, carpet paint, or luxury items like a pool?
You got to throw the pool at me. Huh?
Yes, absolutely.
So, you know, unfortunately, the luxury items like a pool, you can't do those. You know, it's really going to be mainly things that are going to add value to the home. So, to your earlier point, you're right. You know, if you got 70 shag carpet or just a horrific kitchen, you bet you can totally finance in the cost to completely renovate a kitchen or a bathroom. A lot of the interior stuff. Again, as long as whatever we pay for the house and whatever the cost of the repairs are, as long as we can get those done, we're good to go.
So who's coordinating all of this work, and really at the end of the day, who's completing the work?
So as far as coordinating goes, a lot of this is going to come down to really being a team. You know, you're going to have your lender, you're going to have your client, you're going to have your contractor. So especially when we start getting more intricate in our products where we got to do picking out countertops and cabinets, the client's going to have to be prepared to work with that contractor to select certain items to narrow down these bids. Sometimes pretty easy. You know, if we just need a roof done, we get our contractor out there, get a bid, client signs off on that, and we're off to the races.
Excellent. Thanks. Well, let's talk about interest rates. Kind of the elephant in the room with a rehab loan product. Are rates like way higher, or is it kind of similar?
Unfortunately, I think that's kind of the misconception with this product. I think a lot of people are afraid of the product due to cost reasons, and that's really not the case. I mean, obviously, Gavin, rates are going to vary lender to lender. So it's hard to give you solid numbers on that, but ultimately, in most cases that I've seen, it's going to be slightly higher on the rate, but not by much. Again, check with your preferred lender for more details on that, but it's pretty comparable. I mean, remember, a lot of times you're walking into some good equity on these properties, so a slight bump in rate, not a big deal.
Excellent. Well, thanks. Guys, you heard it from Devin. Rehab loans are an amazing product. Whether you're looking for a fixer-upper out of the gate or we run into some issues during the inspection, you know, a rehab loan can be a great product to solve those problems. Especially in a market like we're in now, you know, where inventory is incredibly low. This opens up a whole slew of other properties that our clients can look at. So when you guys are searching out there and you look at a house that can't be financed, consider looking at a rehab loan product to get it done. So thanks for joining today, and we'll talk to you soon. Thanks.